we're good to go. Aman, over to you.
So, very good evening, ladies and gentlemen. I, Aman Shivastav, on behalf of Sikasa Jodhpur, welcome you all in today's webinar. I would like to extend warm greetings to our session speaker of today, CA Mr. Atul Doshi sir, the chairman of Jodhpur branch, CA Mr. Dhaval Kothari sir, chairman Sikasa Jodhpur, CA Hemant Loya sir, chairman Sikasa Mathura, CA Mr. Nitin Kumar Varshane sir, chairman Sikasa Jabalpur, CA Chandni Ahuja ma'am, chairman CA Satara, CA Rushikesh Wangre sir, and to all the professional colleagues who have joined this webinar. I would now like to invite CA Mr. Dhaval Kothari sir to share his words of wisdom. Over to you, sir.
Thank you, Aman. First, I would like to congratulate all the branches, those came together and thought that the topic 44AB, the tax audit, which is a major practicing area of chartered accountants, and they thought that all the students required the basic knowledge of the practical aspect of section 44AB. Now on the dais, virtually, CA Atul Doshi ji sir, CA Chandni Ahuja ji, CA Rushikesh ji, CA Nitin Varshane ji. I extend my hearty welcomes on today's webinar related to practical aspect of section 44AB, which will be deliberated by CA Atul Doshi ji in a few minutes. Hello, I'm audible?
Yes, sir, you are audible.
Yes, sir.
Okay. Now I would like to request all the students to listen carefully about this webinar, because it will help in upcoming task of all tax audit. We all know that recently a few changes came in tax audit, and they are very more important related to section clause number 44. And so I would like to say all the students, please please take it seriously and follow the instruction given by Atul sir. And I would like to request all the students participate in maximum of all activities of all the branches, because it is helpful to improve ourselves. Thank you. Over to you, Aman.
Thank you so much, sir, for your words of wisdom. Now I would like to hand over the dais to Arvind.
Thank you, Aman. According to Greek philosopher, change is the only constant. And in our CA profession, it is justifiable too. Amendments, circulars, notifications are regular part of CA profession. And as an article assistant, we need to update ourselves with these changes. Income tax audit is also called as an audit under section 44AB. It's also required good knowledge and skill to perform this audit. To guide on this audit, today we have CA Atul Doshi sir. Hello and good evening. I, Arvind Kumar Gorachia, welcome you all. Welcome all the chief guests, esteemed speaker, and all the viewers on the behalf of ICA Jodhpur branch and Sikasa Jodhpur. It is an extreme pleasure that we have a collaboration with Jabalpur, Nanded, Mathura, and Agra. And I feel extremely privileged to introduce our esteemed speaker, C. Atul Doshi sir. He is a chartered accountant, currently serving chairman of Satara branch of ICAI, director at Karad Bank, Karad, and partner at Atul Doshi and Company. He did his graduation in 1988, and then he cleared his chartered accountant exam in 1991. He has a rich experience of 28 years in direct tax audits, bank audits, GST practice, and arbitration reconciliations. He is also engaged in philanthropist activities. He is trustee at Mandir Devasthan Trust. Before we start our discussion on tax audit, I would like to invite CA Nitin Varshane, Sikasa chairman of Mathura branch, CA Hemant Loya, Sikasa chairman of Jodhpur branch, CA Rushikesh Wangre sir, Vikasa chairman of Satara branch, CA Sakshi Jain ma'am, Sikasa chairman of Agra branch, and CA Chandni Ahuja, Sikasa chairman of Jabalpur branch. CA Nitin Varsani sir, over to you.
Thank you, Aman, for giving me opportunity to co-host this webinar. First of all, I would like to congratulate Jodhpur branch and Sikasa Jodhpur and the team of Sikasa Jodhpur that they have organized this such a beautiful program for the benefit of the students. और मैं सबसे पहले धन्यवाद देना चाहूंगा हमारे आज के स्पीकर श्री अतुल दोशी जी को कि जिन्होंने आज का समय निकाला अपना हमें देने के लिए। उसके अलावा मैं थैंक यू करना चाहूंगा सभी सिकासा चेयरपर्सन जो कि कोहोस्ट कर रहे हैं आगरा ब्रांच, जबलपुर ब्रांच और नांदेड़ ब्रांच का भी, कि सभी लोगों ने अपने एफर्ट से इस प्रोग्राम को सक्सेसफुल करने के लिए एफर्ट किए। उसके अलावा मैं सभी अटेंडीज को और सभी जो स्टूडेंट्स हैं, मोस्टली स्टूडेंट्स ही आज का प्रोग्राम अटेंड कर रहे हैं और उन्हीं के लिए ही है, तो मैं सबके लिए एक बात बोलना चाहूंगा। आप में से मोस्टली बच्चे किसी ना किसी सीए फर्म में एज ए आर्टिकल असिस्टेंट वर्क कर रहे हैं। तो एक चीज आप ध्यान रखें कि आप लोगों को केवल आर्टिकल असिस्टेंट नहीं है, पूरी ऑडिट आप लोगों पर ही डिपेंड करती है। जितनी क्वालिटी से आप लोग काम करेंगे उतनी ही अच्छी क्वालिटी आपके ऑफिस की ऑडिट की आएगी। बिकॉज आप ऑब्जर्व करेंगे कुछ लोग शायद इस बार पहली बार ऑडिट में एंगेज हो रहे हो या कुछ लोग पहले से ऑडिट करते आ रहे हो, तो उन्हें पता होगा कि जो आपके प्रिंसिपल हैं वो आपके किए हुए काम पर रिलाई करते हुए उसको आगे बढ़ाते हैं। तो आप लोगों को जितनी अच्छी नॉलेज होगी उतने अच्छे से आप अपने ऑडिट वर्क को कंडक्ट कर पाएंगे और उतनी अच्छी क्वालिटी आप अपने काम को दे पाएंगे। आज का जो वेबिनार रखा गया है टैक्स ऑडिट की बारीकियों को सीखने के लिए कि किस तरीके से टैक्स ऑडिट के अलग अलग प्रोविजंस हैं, उसके ऑडिट को करने के लिए हमें क्या क्या काम करने हैं, क्या रूल्स हैं, किस तरीके की एक्टिविटीज अपने को प्लान करनी चाहिए, वो सारी चीज आज आप लोगों को सीखने को मिलेंगी। और मैं चाहूंगा कि आज यहाँ से आप जो कुछ भी सीखें उसको इस बार ऑडिट में आप लोग इम्प्लीमेंट करें और अपने ऑफिस की ऑडिट को अच्छे से तरीके से करने की कोशिश करें, जिससे कि आपको भी बहुत कुछ सीखने को मिले, आपके काम की क्वालिटी अच्छी हो और उसके अलावा आपके बॉस भी आपसे खुश हों। मोस्टली ये सब चीजें आपको फ्यूचर में जब आप लोग सीए बनेंगे तब आपके बहुत काम आने वाली हैं, क्योंकि जो कुछ आप ऑफिस में सीखेंगे वो आपको किसी प्रकार में सीखने को नहीं मिलेगा। तो आज के प्रोग्राम में आप अपनी प्रेजेंस बनाए रखें, एक्टिवली पार्टिसिपेट करें और बस यही कहना चाहूंगा आप सभी लोगों से। थैंक यू।
Now I would like to call CA Rushikesh Wangde sir for their word of wisdom. Rushikesh sir, over to you.
Yes. I'm audible now?
Yes sir.
First of all, I would like to thank Jodhpur branch for organizing this very fantastic webinar. And today's speaker is CA Atul Doshi sir. He's been a very dynamic personality and he has rich experience in direct taxation. And under his leadership, Satara branch as well as Satara branch of Vikas had attended various milestones in the first time in the history of Satara. So I am sure that people will get good knowledge of experience and जो टैक्स ऑडिट अभी सीजन चालू है उसमें उनको बहुत सारी हेल्प मिलने वाली है। तो आई रिक्वेस्ट ऑल द स्टूडेंट्स टू अटेंड दिस वेबिनार वेरी meticulously so that it will not only help you in your practical aspects but it will also help you in your academic life, because tax audit in income tax as well as in audit paper there will be some portion of tax audit. So with this I'm very grateful, and without wasting much of the time I hand over mic to Arvind. Over to you.
Thank you sir. Now I would like to invite CA Chandni Ahuja for their word of wisdom. Ma'am, over to you.
Thank you so much, Arvind. First of all, I'll congratulate Jodhpur branch for this wonderful initiative that they have taken for students, and also C. Aman Srivastava for inviting me, and also C. Dhaval Kothari sir for adding Jabalpur branch in this initiative. And moreover, so the topic that they have taken, 44AB, is such a hot topic and it's a need of the hour. And I think जितना ऑफिस में प्रिंसिपल्स के साथ कनेक्ट होके बच्चे सीख नहीं पाते, वो यहाँ पे बैठ के हम उनको समझा सकते हैं, especially with the help of Atul sir. Atul sir, I thank you so much for taking out time for students and sharing your knowledge with them. And as Nitin K. Vashne sir said, कि students के लिए golden opportunity है to grab as much as they can from this session. And with this, I will stop my words and say that learning is a treasure that will follow its owner everywhere. And students, this is for you.
Thank you so much, ma'am, for your words. Now I would like to invite CA Sakshi Jain, ma'am, Sikasa Chairman of Agra branch.
Arvind, she is busy somewhere, so you can proceed with the next.
Now I would like to invite CA Hemant Lohia, sir, Chairman of Sikasa Jodhpur. CA Hemant, sir, over to you.
Thanks, Arvind. I, CA Hemant Lohia, Sikasa Chairman, Jodhpur branch, warmly welcome all of you for today's webinar on practical aspects of Section 44AB. Now, not taking much of your time, I would request Atul sir to please deliberate your views and expressions and share your and give experience. Thank you.
Thank you so much, sir, and thank you to all the delegates for their respective words. Now I would like to invite CA Atul Doshi sir for the deliberation. CA Atul Doshi sir, over to you.
Hello. Good evening, everyone. Am I audible?
Yes, sir.
Yeah. Chairman of Jodhpur branch, Chairman of Sikasa of Jodhpur, Agra, Mathura, Jabalpur, and Chairman of Vikas Nanded. I congratulate you all to have a wide spectrum of area you have covered, and this is the most burning issues right now. And you have taken this webinar on very right time, and that too on Sunday, because students get holiday on Sunday. And somebody was talking that students should learn it right now, and that way they will help it to their principals. I like to make one addition to that. See, बच्चे लोग अभी जब स्टूडेंट मेरे हमारे पास आते हैं आर्टिकल के लिए जब आते हैं, they are like न्यू बॉर्न बेबीज, नो the way which you teach them is जैसे आप उसको संस्कार करोगे उस तरह से वो बढ़ जाते हैं. जैसे छोटा बच्चा जब जन्म लेता है घर में, तो उसके बाद उसके माँ बाप जैसे संस्कार करेंगे उसका वैसा ही तो हो जाएगा. तो आर्टिकलशिप ऑफ योर फर्म, yours, is quite important in your life, because this will give you a way of forward to think in future and do work in future also. जैसे आप आर्टिकलशिप करोगे उस हिसाब से आप आगे जाके बढ़ोगे. During the period of articles, if you are able to do it the proper work of audit in earlier stages itself, then you will get more learning and more spectrum practice in future. So coming back to the subject, I'd like to share my screen. Should I screen?
Yes, sir. Yes, sir. Yes, sir.
Okay. Agenda for the discussions today. I hope most of our students are attending today. So that basically introduction to tax audit under Section 44AB, definitions of certain sections, what is mean by turnover, what is mean by gross receipts and sales, and what is Form 3CD. Okay. Let me share you, frankly, this tax audit is bread and butter for every chartered accountant across the India. Okay. And this introduced by Finance Act 1984 by the then Finance Minister VP Singh. That time, most of the students may not be aware of this history. That's why I'm just brushing upon that history of this 44AB audit. That in the 1984, that time there was no computerization at all. And books are always on manual method of accounting. And that time the physical verification, physical return, and all these things were there. We are supposed to file the return physically, then assessing officer was supposed to scrutinize it. We had to attend for the income tax offices. We'll have to show the books of accounts, and the officers were getting hurdles in finding out that various aspects. So in 84 budget, that Finance Minister VP Singh has introduced this tax audit, and this. What is the purpose of this tax audit? Basically, this purpose of the tax audit was, just I will share with guidance note also. What is the purpose of the tax audit? Tax audit purpose was just to get various information relating to accounts or whatever the sections to the assessing officer. The report is recommendatory and not binding on the department, basically. 44AB says that accounts must be true and fair. So whatever the accounts you are getting audited under 44AB, that has to be a true and fair is the basic criteria, is to be applied, and it is to be certified under either in Form 3CB or 3CA, and certain particulars in Form 3CD has to be certified by us. One of the objectives of the tax audit is to ascertain derived report requirements, various requirements which is contained in the CCD, that is to be certified by us. What nowadays, how many students have just recently, Rishikesh, have you done that poll? Rishikesh, are you there?
Sir, it's going on. It will be ready in some 5 to 10 minutes. I think we can proceed directly.
We should proceed directly. Okay. So for that, we'll come back to the slides. What is turnover? Turnover is sales, gross receipts. It is not defined anywhere in the Act. Okay. What is it is to be taken as a common parlance. What is the accounting principles we have that is to be taken for the turnover versus either it is sales. But whenever you take sales, it must be either you have to reduce by goods return, or whatever the trade discounts you have to return, that is to be deducted from the, that sales. Suppose a 10 lakh rupees invoice has been raised and 2 lakhs rupees as discount has been given. Then that case 8 lakhs will be taken as a turnover, not gross 10 lakhs rupees. I think this is more clear for you. But certain parts, certain items has to be forming part of the turnover. That is sale of scrap. Normally, sometimes it may be credited to somewhere other income and all like that. That will be treated as a turnover. Sale of byproducts will be treated as a turnover. Sale proceeds of shares. Suppose that firm is dealing in shares. Suppose that business itself is purchase and sales of shares. In that case, it will be treated as when the stock is treated as a stock in trade. The shares has been treated as a stock in trade. In that case, it will be treated as a turnover. It will be added in the turnover. Special rebate in the nature of commission. If you are auditing certain agencies like cement trading and all that, where they have given special commissions on sales. Normally what happens, but they sell, they give the FOR value of rupees 100 or 200 rupees per bag, and they give, afterward they give the credit note in form of some incentive and all that, or commission on that. That is to be treated as commission or whatever maybe, it will be form part of the turnover. Items which are not forming part of the turnover. Okay, suppose price adjustments, sale proceeds of share securities when it is held as investments. Okay. When you held shares and securities as investments, earlier I said it is to be added. When it is to be added, when it is considered as a business income. But when it is to be taken as investments, it is not to be added. Sale of proceeds of fixed assets, that will not form part of the turnover. Special rebate allowed to the customers, that will not form part of the turnover. Then cash discount, that will not form part of turnover. one of the basic tax duties and collected. There are two methods, either inclusive method or exclusive method. If you are applying exclusive methods, suppose GST, your sale is rupees 5,000 rupees, out of which 50 rupees is your GST, and you are crediting 50 rupees GST to the separate collection account, that will be exclusive method of accounting. In that case, that will not form part of your turnover. However, but if you are passing the entry including GST, in that case, it will be part of the turnover. Then speculative transaction, aggregator report. In the case of speculative transactions, you might be aware that turnover is to be ascertained between positive and negative differences, that is absolute value of that items. Suppose 5,000 is your loss and 10,000 is your gain in the speculation transaction, then 15,000 will be your turnover. Okay, not 5,000, net 5,000. Similarly, in derivatives and futures and options, same thing is favorable and unfavorable differences shall be taken to turnover. However, earlier, before the last guidance note was there, before that last guidance note, in that guidance note, that premium receipt on sale proceed was to be taken to the turnover. However, by this recent guidance note issued by the ICI, which contains that premium receipt on sale on options is not to be included in the turnover. That is very well good adjustment they have given, and delivery-based transactions, total sale value is to be considered as a turnover. Okay, and what is the gross receipts from the business? It will include all receipts, whether cash or kind. Suppose somebody has given you fees or whatever in consideration in the kind, that will be also form part of your turnover. It is not only that it will be received in cash only, it may be in kind also. Items to be included in the gross receipts. Suppose advance from customers has been forfeited. Suppose there is a wedding hall and they are taking bookings, okay, and unfortunately some event has been happened and the booking has been cancelled. So that cancelled, they may charge something to that customer. That amount of which you have charged, which amount either amount you have charged or amount of the advances you have been forfeited, that will also form part of your gross receipts. Then cash received, cash incentives on exports, dividend, whatever the dividend received on dealer, in that only in the case of dealer, not in the case of when it is investments. Higher charges and installment received in the course of his higher purchase will be treated as a gross receipts. Then rental income, where same is accessible as a business income only. Suppose my business is to renting some offices. There are a clock hour basis or whatever baby basis, on table place basis, that is my business itself. In that case, it will be treated as my business income, and that will be form part of your gross receipt. Sales prices, sale procedure scrap wastage, if not treated as a part of sale turnover, it will be treated as gross receipts. Item not to be included in the gross receipts. Suppose I had advance property in respect of fixed assets. Suppose I want to sell some property or my car, okay, and he has given me a 10,000 rupees advance, but later on he doesn't turn up. He is not able to make that money. His loan is not passed, whatever may be the reason. Then I have forfeited some amount. That will not form part of your turnover. Out of normally articles go for the audit, and we claim for the reimbursement of expenses for audit and all that. That will not form part of your turnover. Rental income, which is not accessible as business income. For example, I am a chartered accountant, I have some house property and I given rent, I'm receiving that rent, that will not form part of your turnover. Then share profit, this is one of the major change, share profit of partner in partnership firm, as well as remuneration received from partnership firm. Earlier, there are some decisions has been given, and where it has been held that it is a business income, and you should have it treated as if it is more than the limit to which is we are going to deal with that audit limit, then you will have to get your accounts audited. However, now Bombay High Court has given one judgment whereby it will not be treated as your gross receipt or gross turnover. Then there are limits. Okay. there are tax rate to applicable to whom? It is applicable to only business associates. Okay, business where turnover exceeds 1 crore or 10 crore. Okay, 1 crore is a normal case. 10 crore, there is one sub-condition is there, we'll see it later. Okay, then in the case of profession, when it exceeds rupees 50 lakhs, tax audit under section 44AB is mandatory. Then when you are showing business income less than what is mentioned in this presumptive taxation, that is 44AE, 44BB, 44BBB. In that case, you will have to get it books accounts audited compulsory. If you are a profession, for example, a doctor, a lawyer, architect, chartered accountant, like that, if you are doing that profession and your deemed profit is less than, whatever the net profit is less than 50% of the gross receipts, understanding me, 50% of the gross receipt, audit is mandatory irrespective of your turnover. Okay, irrespective of your turnover. And in that case, your basic exemption limit has been exhausted. In the case your income itself is below the basic exemption limit, you will not be done for the audit. And one of the draconian or whatever, one of the controversial section 4484, where tax audit is applicable. In ED4, it shows that when you are not showing income below 8%, okay, from 1 crore to 2 crores, in that case it is applicable, as well as if you are showing last from 88, if before that, if you are shown income at 8%, now you cannot claim below 8%. In that case, you'll have to get books accounts audited. This is one of the most controversial section, but you'll have to take in mind each and every case whenever your bosses gives you. Okay, and all this is very important because no, in the 3CD column, you have to mention under what section you are going to get books accounts audited. When your principals or your clients comes to you, give the accounts for audit, then you have to first ascertain under what section it is applicable. The 44B is applicable. Then, and that section is to be meticulously, you have to fill in form 3C-A or 3C-B. Okay, I am giving you some small examples. A Limited started manufacturing. First year turnover is 1 crore 60 lakhs. Okay, and net profit is 9 lakhs, and total income is 7.5 lakhs. Whether audit will be applicable, can you just give me in chat? Rishikesh?
Yes, sir. People are putting in the chat box, and
Okay, okay.
yes, it is applicable as per my opinion.
Yes, it is applicable because turnover exceeds 1 crore. Okay, then Mr. B trading turnover 70 lakhs, net profit 10 lakhs. He is a doctor. Okay, and net profits to 25 lakhs, taxable income 30 lakhs. Whether audit is applicable? See, trading turnover is 70 lakhs. Okay, net profit from that 10 lakhs. He is also a doctor. Okay, he receives fees 45 lakhs, net profit 25 lakhs. Okay, total income 32 lakhs. No, audit is not applicable in this case. Reason behind turnover for trading is not exceeding 1 crore and gross receipts do not exceed 45 lakhs. So in my opinion, its tax audit is not applicable. And last case, trading turnover, 90 lakhs is a turnover, commission is 5 lakhs, Net profit is 15 lakhs and total income is 14 lakhs.
No, in this case also.
Yes, absolutely correct. So in that case, also not applicable. Reason behind his turnover is 1 crore, less than 1 crore, and assuming that he has not applied that lower 4480 in earlier years, 87, 88. Okay, then a limit of 1 crore or 10 crores. Okay, 10 crore. When is to be applied for 10 crores? 10 crore limit introduced recently. This is only applied where your cash component of either receipt as well as payment, it do not exceed 5% of the total gross turnover. Okay, in that case only that limit of 10 crore will be applied. Otherwise, that 2 crore limit only will apply. Now we'll go to clause by clause analysis. Before going to that, let us just go through what I think those who are not understood. Okay, go to first basic sections of 44AB. Okay, 44AB, what 44AB is, if you are carrying business, if his gross total sales, turnover, gross receipts, as the case may be, in the business exceed rupees 1 crore rupees in the previous year, provided that in the case person whose aggregate amount of all received gross receipts, amount received, sales turnover or gross receipts including previous year in cash, what is what I was talking about, that 10 crore limit is only for them, only still 10 crore. In the other case, it is only 1 crore limit is there. We'll switch to clause by clause. I'm going with the guidance note only, so a student will get understood. Sorry, take a little time. Because these are not relevant for you actually. Yes, this is 3CB, where we have to report what we report. Okay. In 3CB, we have to report that who is responsible for preparation of form 3CD or 3CB. Okay. As per guidance note issued by the ICI, it is onus is to responsibility of the auditee, means client, to furnish all details in Form 3CD. They have to give us all information duly filled in Form 3CD, जो आज की तारीख में कोई भी क्लाइंट नहीं करता है किसी भी के ऑफिस में. I have no idea in small and medium practitioners offices, any client they SIP has giving you a Form 3CD. Normally we are doing only, but as per 3CD, as per guidance note, it will be onus on duty on the auditee to give that all information to us. However, as practically we might be doing, that's a different story. Hence, what we report our responsibility is to express an opinion on these financial statements based on our audit, and we have conducted this audit in accordance with the auditing standard issued by the ICAI, and those standards require that we comply with the ethical documents and plan, perform audit, and obtain reasonable assurance about whether the financial statements are paper material statement. This qualification we have to always, this has to be given in the 3CB or 3CA. Okay, then it is also responsible. We are also responsible for verifying statements of particulars required to be furnished under Section 44AB. Okay, what that particulars are to be furnished has not a true and fair. That is true and correct. Okay, so what we have to certify, that we have to certify that whatever the particulars we are providing, we are submitting to the in the tax audit report has to be true and correct. You might be aware in the case, unfortunately, you have given incorrect figures. Okay, incorrect figures. In that case, there is one penal consequences are there where 10,000 rupees penalty per mistake can be levied by the ATO. Okay, and as I told you that 3CB is in two parts, where you have to give true and fair view of balance sheet and profit and loss account, and in the second part will be annexed whatever the information is true and correct. That has to be, we have to certify that. After to whom Form 3CA is applicable and Form 3CB is applicable. In the case you have not audited the books of accounts and you have not certified the true and fair view. For example, in the case of books of accounts is audited by some other chartered accountant. Okay, and you are auditing only for the tax audit purpose. Okay, in that case, Form 3C is to be given. That is normally in the case of private limited companies or public limited companies where you are also maybe a company auditor, or you may not be a company auditor. In the case you may not be a company auditor, in that case, Form 3CA is to be given, where true and fair has to be, you have to give information about Form 3CA, who has audited, when is audited, and you did not have to apply for the test of true and fair. Only you have to go and fill the particulars and certify that particulars whether they are true and correct. Okay, and you might be aware or may not be aware, as initial engagement opening balance assessment, you are auditing for the first time. Suppose client आज की तारीख में उसका 2 करोड़ हो गया, पहले कुछ बिजनेस नहीं था, अभी वो ऑडिट को आ गया. So we have to apply this SA 510 for that purpose, and opening balance is to be duly and verifyly you have to verify it. Okay. Okay. Now we'll come to Form 3CD. In Part A, it's very simple information. Okay, name of the assessee, I will not deal with that. Okay, that is not much. Sir. Only one issue, that clause number 8. Okay, this is very important for you. Okay, you have to first decide under what section you are going to do audit. 44 section A, B, C, or D. That you should not make mistake. Just now we have discussed already. And second thing, that under whether SSC has opted for the taxation under new scheme of provisions of law. That is, everyone must be aware there's old method and new method. So whether they are applied for new method, that has to be decided at the time of audit itself, and we have to give remark there in Form 3C D. Then what are the registrations? Various registrations must have been taken. Okay, then in clause 2, nothing but address, registrations in the case of proprietary, whatever these are the small things you will understood. This is clause 9. Okay, here you have to mention whether it's AOP, okay, or partnership firm. If it is a partnership firm, you have to give name, address, details. In the case of change in constitution, you have to give change in constitution. What is the change in their partnership firms? So normally, what happens now? Your bosses never told you any change in the partnership. Okay, what happens? The client comes to meet your boss. They change their deeds. Okay, and they keep it in the income tax file. Okay. I don't know whether how many of you, but in our offices, at least we keep audit file separately and income tax file separately. And articles or juniors who are doing the audits, they may not be aware of this change in the constitution. Okay, when firms have been reconstituted, partners have been changed, rate of profit, division of profit might have been changed during the year. So what you do? Whenever you are auditing a partnership firm, okay, you, while auditing the partnership, you go and check with the income tax file whether there is any change in the deed during the current financial year. If yes, you have to report this, whatever the clause is in this clause 9A as well as 9B. That is more important. This is the common mistake happens. Normally what we do, copying from importing data from last year's file, you're just pasting it, typing it, your boss is really busy, he might be so in number of meetings, you're just putting in front of him, signing that. And so after some time, you may get aware, oh, ye to gati ho gaya yaar, ye to change ho gaya tha, main dhyan mein nahi aaya. Because that poor guy who's audited that, he is not aware of it. So this is the common mistake happens. Okay, this next clause, this clause number 10A and 10B. Clause 10 and 10B, nature of business and profession. Okay, you have to state what type of business SSC is carrying on, what type of profession is carrying on. It's very simple clause. Then in clause 11A and 11C, you have to say whether books of accounts has been prescribed under section 44AA. If yes, list of so books of accounts so prescribed. See, section 44A has only prescribed in the case of professionals, not in the case of business. But in common parlance, whatever the and list of books of accounts maintained, what you are auditing the books of accounts, you have to see what books of accounts have been maintained. Only in the case of doctors, as per Rule 3C of something, 3C, they have prescribed some case register is to be maintained. That you'll have to mention here, whether it is maintained, and if yes, whether you have been verified on that. That is to be taken care in the case of the doctors. You'll have to see what is the principal books of accounts, where the books of accounts will be maintained. Sometimes, you know, SSC, your SSC might for Jodhpur, but his accounts office is in Jabalpur. Okay, so we'll have to mention properly where books of account has been maintained. Nowadays, virtually, because of this computerized area, this has not much relevant because no server may be anywhere, and that may be a different story. but as of now, it is in the rule books. We'll have to mention that. Then clause 12, where you have to mention, see, when you are auditing books of accounts, need not necessarily all businesses you are auditing. Suppose X having 2-3 businesses, and out of 2-3 businesses, two businesses having the books of accounts, and one business he might be offering taxation on the presumptive basis. Okay, in that case, you have to mention whether the profit and loss account includes any profits and gains on presumptive basis. If your profit and loss account includes only, yeah. If it is in the capital account, you need not have to report there. Okay. कैपिटल अकाउंट को अगर क्रेडिट किया है तो उसको जरूरत नहीं है, प्रॉफिट लॉस अकाउंट क्रेडिट किया है तो उसको जरूरत है. देन 44AE, then one of this major clause 25, method of counting employed during the previous year. That is, normally there should not be any change in the method of accounting. Now section 145 mandates only two method of accounting, either cash or mercantile. Earlier hybrid method was allowed, but I think last 8 to 10 years back somewhere, this method has been discontinued, and only either cash method of accounting or mercantile method of accounting is to be applied. Then you have to say whether in this case, for example, last year somebody was having cash method accounting. Now he shifted to mercantile method of accounting. Then in that case, you'll have to count down what is the change, and you'll have to qualify accordingly, whether profit or increase in profit or decrease in profit. You'll have to find out in that case. Then section 145, adjustment is required to be made with profits complying with the provisions of income competition disclosure standard. See, you might be aware that a couple of years, 3-4 years back, income tax has issued one income competition disclosure standards. Around 10 standard has been notified so far, and those standards doesn't applicable to your books of accounts, but it is applicable to your computation of income. However, these standards will not be applied where cash method of accounting is applied. Only in the case of mercantile method of accounting, these standards will be applied. In this case, you'll have to find out. ICDs is a big topic. It will take, at least talking about ICDs, we cannot discuss all ICDs here, but you're allowed to report any increase or decrease in the profit because of this ICDs, especially valuation of inventories, or sometimes changes in foreign exchange or government grants. This may have some effect on profit. There are certain competition standards. Right now we are applying standards while books of accounts issued by the ICI. However, the standards which are issued by the ICDs is to be only applied for the computation of income, not for the purpose of books of accounts. You will not have to pass any entry in the books of accounts, but you will have to either offer for the taxation. In the case, you have to give some disclosures of ICDs, whether you have followed or competition is followed or not. This is very important clause. I'd like to deliberate something by the PPT also. Just for the purpose of your just understanding, okay, ICDS 9 borrowing cost, okay, and AS 16 borrowing cost may have different views, Okay, I cannot explain here right now, but interest on borrowings, ICDS 16. If you calculate by way of I say borrowing cost as per. Unfortunately, I'm not able to see that down the side. Suppose total borrowings are around 1,000. Specific borrowings for the qualifying asset is 200. Okay, as per ICDS. And total interest expenses are 100. And interest for the specific borrowings are 10. Then qualifying assets, okay, is 300. Qualifying assets closing are 450. Then expenses qualified on assets are around naturally 150. And average total assets 1,000. Then capitalization rate under AS is 11.25%. Okay, as against capitalized rates for ICDS, it will work out right like this. I will provide you slides. Unfortunately, I'm not able to see it down. So there are some differences in the ICDS as well as accounting standards. Now, one of the most important clause, that is clause 14A and 14B. Okay, 14A, method of valuation of stock employed during the previous year. Normally, we give lower of the cost or market value, lower of the cost or realizable value, which is less, and details of deviation under section 145A. See, you might be aware, section 145A is method of valuation which is prescribed, which gives you valuation including your taxation, what is the tax liabilities. Okay, then however, that if you are applying, if you are employing the exclusive method of accounting, your sales or purchases may not have tax component. Suppose if you add this tax component in the valuation of inventory, okay, normally it will, you will have to then add to the opening stocks also. In that case, normally in 99 out of 100 cases, you have nil effect. When stock is to be valued at cost plus your tax on it, for example, the GST or excise at point of time, okay, that is to be added as per 145A. However, in this clause, we'll have to give reconciliation statement that effect of the 145 is nothing but zero, and that reconciliation statement to be attached with the tax audit report. That is very important. Then this is one clause where we have to give clause number 15, give following particulars of capital asset converted into stock in trade. Suppose the land, some person having a land appearing in the balance sheet for so many years as the investments. However, during this year, he has decided to build and you have to make so many plots out of it and sell one more plot. And convert it into business. That land he has converted into capital asset to stock in trade. Okay, that reporting has to be done because capital gain is to be aroused at the time of final sale has been occurred. For that information is required for the department for their records. This information we have to give it to them. Then clause 28, amount not credited to profit loss account being items falling within scope of section 28. Suppose your profit loss account not credited, amount not credited to profit loss account being item for the scope of section 28. Section 28 gives different forms of income. Okay, all these forms of income has been explained in section 28. However, suppose you are doing audit of a proprietary concern, okay, and in that case, bank interest, sale of capital gain, shares sold, capital gain is aroused, or some property has been sold, that capital gain is there, or FD interest is there. Normally, that is not business income, so we are not credited into profit loss account. However, that is income under section 28. So we'll have to report this section 20 under this clause, item which are income, considered to be income, however, but that may be taxable or not taxable, because for example, PPF with interest is your income, that may be exempt, but they are not said that only taxable income is to be reported. That any items falling within the scope of section 28 is to be reported, whether it's taxable or not taxable. So PPF interest is also there. If you are credited to capital account, you have to mention all these income details in this clause. Okay. Similarly, any duty, drawback, refund, whatever the custom duty has been received, that has to be reported under this clause, provided it is not included in the profit loss account. Then escalation claims or any other item of income. For example, earlier it was says 58 is your 28 is only for business income, and D, any other item of income will be included here. For example, capital receipt, if any. For example, you have sold, you have been waiver of some loan, and in that case, you are treating this income as a the waiver of loan as a capital receipt. That is to be reported here. From 16, clause 16A, B. This is one of the draconian provisions exist in the Income Tax Act, which we have to report. Okay, being students, if you are final students, you will be well versed about it, or even intermediate students, you has been this clause. You need to mug up your mind whenever you see that any capital asset has been sold and it is to be registered. I don't know what is in Rajasthan, but in Maharashtra, when you sell that property, we have to go to sub-register office where they put assessable value as per stamp duty provisions. Okay, and actual amount is for which sale transaction has been taken, whether it will be 43 CA or 50 CA, whatever it may be. Okay, in that case, law says that suppose stamp value of either of the property is 1 crore 20 lakhs, and if you are buying that property for 1 crore, then that 20 lakh has to be taken as income in both the hands, either on seller as well as purchaser. This is what the law it is right now. So we have been casted duty by the department to see whether consideration received or accrued is how much is there. You have to report here. You have to give details of property. Then suppose consideration received by you is 1 crore rupees and value adopted by the valuation for the purpose of stamp duty calculation is 1 crore 20 lakhs. Then you have to write down here 1 crore 20 lakhs. And whether provisions of second proviso, naturally it will be applicable, because when your consideration is 1 lakh and it is 1 crore 20 lakhs is stamp valuation, so 56 to 10 is naturally applicable here. And that case we will have to report it. However, in the case it is not there, either of there, still you have to report there. In this clause 18, what we have to discuss about depreciation allowance under Income Tax Act. So this is very most applicable in the each and every case, but it will be quite important for the purpose of companies, because in the Companies Act, depreciation rates are different for the balance sheet and for the tax purpose. And even in this proprietary case also, some of the cases I know where that assessee may follow different rate of depreciation for the purpose of their working, and for the purpose of computation, we apply in the competition of income whatever the depreciation as per Income Tax Act. So these details has to be submitted. Normally, we have already information available with us, so nothing new in this clause. It is applicable. We have much aware of this depreciation clause there. Only opening balance, WDV, and only thing is to be considered here, the concept of block capacity has very important in this case. Whatever the deductions, for example, assessee may have 2-3 cars. Okay, he must have sold 1 car, but that rate of depreciation is 15%. Okay, in that case, the value of cars sold, if it exceeds more than the WDV, you should not take that profit to the profit loss account, because it provided that some other 15% item is available, the 15% items are available, then you'll have to deduct from there only, and your depreciation will be reduced. That care has to be taken. Then this clause is amount admissible section 32 AC and all that. These are the small clauses. I will not deal with that. Normal case, this is not applicable. This is one of the most important clause. Okay, this you have to meticulously look into this picture. Any sum paid by employees as a bonus or commission or services rendered by which sums otherwise payable to him in profits and dividend. This is normally not applicable, but details of contribution received from employees or various funds. Okay, in where you'll have to mention what is the date of deduction from the employee, what is the due date of payment under that act, for example, ESI Act. Suppose in ESI, Employee State Insurance Act, whatever the PF Act, as per Provident Funds Act, what is the due date of payment is to be mentioned here, not due date of the 43B. Okay, there is no question of 43B. Any sum received from employees is to be taken. Suppose his salary is around 15,000 and 1,500 has been deducted. So 1,500 is received from employees. What is the due date is to be mentioned. Actual amount paid is to be mentioned, and actual date of payment to the concerned authority. Here you have to mention actual date on which you have paid. And consequences of this clause are very rigorous. If you are not paid on due date, with grace period, some 3 days, which is there. After that, if you are not paid in that grace period, whatever the deduction you have made, whatever the amount is received, will not be treated as expenditure in your hands, and that amount will be added back to the total income automatically by the CPC. Earlier, it was done by the only in the competition of income, but now if you forgot to do in the competition of income, CPC is already doing there. Then amount of expenditure, various different expenditure, advertisement expenditure, then expenditure incurred for political parties. So when you are scrutinizing the profit loss account, if you find out this type of expenditure, suppose this penalty by a violation of under any law, this is very draconian. Even you are suppose you go and park your car in no parking, and nowadays, in Maharashtra at least, you get e-challan immediately. Okay, and you'll have to pay on the line. So immediately by card and all that, then only car will be released. So now these all types of fines comes into books of accounts. Earlier, assessee might be paying in cash, may be taken in the books of account, may not be taken in the books of account. But nowadays, these types of because of this use of e-banking and e-network, So all these are coming to the books of accounts, and you'll have to deeply scrutinize it and mention here. Then this is the most draconian provisions under the and most tedious job for us. See, you have to mention what you have to find out by scrutinizing the profit loss account. You have to find out first how much payments which are applicable for the purpose of TDS. Normally, salary, you have to see number of personal salary whose salary income exceeds rupees maximum or not chargeable to tax. In that case, whether that TDS provisions are applicable or not, 192. Then normally 194. A, interest, 194C. All these are the normal cases of 194Z. You see, try to see the profit loss account. What are the professional fees has been paid? What if that fees is more than the limit which is prescribed under the Act, provisions of the Act, the limit under the Act? In that case, you have to go and see that whether that TDS has been deducted or not. In the case you have not deducted the TDS, you'll have to report here, you'll have to find out, you have to make one table, okay, where the table on how much amount you are not able to deduct that TDS, you have to find out that, scrutinize it into that. First, go see that respective head, for example, contractor payment or professional fees payment or salaries payment, under which are items which are qualified for the purpose of TDS, in which are the items not, you have to find out which are the items are not done, the item on which TDS has not been done. And then you have to arrive at figure, and then you have to mention here that details of payment on which tax has not been deducted. Okay, that is first. Second is details of payment on which tax has been deducted but has not been paid in the year or in the subsequent year before the expiry time mentioned in section 201. Suppose sometimes what happens now that accountant has been changed. Okay, in between what happens, he has been deducted at TDS, but what happens that account has been changed and he has not handed over properly, and next person not aware about that deduction has been made. And normally what happens now in the month of you deduct on 7th, or you have to pay it also. Unfortunately, it has not been paid. Then you have to report here it is not paid, and details of payment which tax has not been, that is either earlier it was a non-resident, and this is IA is for resident assessees. You have to report on this in clause. Then amount debited to profit loss account being interest, salary, bonus, commission, remuneration, admissible. Suppose this clause is applicable to partnership firms. In this clause, whatever the allowances or bonuses, commission, remuneration you are giving to the partner, whether that is within the limits of section 40B, that you have to arrive at. Sometimes no. In deed itself, it is provided that it will be credited to their capital account in the ratio in the mentioned by the section 40B, and out of that, so much percentage has been is to be allocated. In that case, problem doesn't arise. Problem arose where the fixed salary has been mentioned in the deed, and sometimes salary may exceed the amount of limit, and that amount of limit, if it exceeding, you'll have to mention that how much exceed salary has been paid to them, to the assessee. That is, you have to mention here. Then clause 36D, clause D, disallowance deemed as income under section 48(3). You might be aware, one of the common mistake happens here. Any expenditure you are making, that should not be more than 10,000 rupees. See, initially this limit was 2,500. Then it was make it to the 10,000. Then again it was raised to 20,000, and then again decreased to 10,000 during the demonetization period. Okay, so anything you are paying to whatever your purchases, what you are doing the purchases or expenditure, your car expenditure, its very limit is very low, but that is what it is. When you go and servicing your car, it may exceed 10,000, 20,000 rupees because cost of servicing is more higher nowadays. And in the case owner is not going and is sending his driver to for that car repairing, normally he pays in cash. And this type of details happen, we normally get, and car repairs, then sometimes electricity bills, no MSME, that nowadays it is not a government company. So it's under government. So it is government, but there are some private companies also. In that case also sometimes cash payment, we get it. That we will have to report, and it will be added to the income of the assessee automatically. Then provision for payment of gratuity not allowable. Suppose that not an approved gratuity fund, in that case it will be not be allowed as a deduction. Any somebody employee is not available, that is section 49. Particularly so any liability of contingent nature which debited to profit account. See, which is particulars of any liability of a contingent nature is there. If it debited to P&L account, you'll have to report. Then this clause 14A regarding 14A, expenditure which has inadmissible for the exempt income. This clause was very wide impact before the dividend was taxable. When dividend was exempt, in that case, this section was playing very high role. Now, dividend is mostly taxable, so it has not much effect on us, except some cases, few cases. Then our amount admissible under section 36(1)(3) that you have to report. Payment to clubs. Sorry, this guidance, this particular not needed for discussion, so I am skipping that. Yes, amount of interest divided under section 23 of micro and small medium enterprises. This clause 22 has been inserted in last 3-4 years back, 4 years back. This clause is not because of this Income Tax Act. Income Tax Act has been amended by the way of this act. Any interest admissible, inadmissible under section 23. Suppose you are paying to MSME is your customer, and there is a limit of 90 days in which you have to pay to MSME. In the case you are not paid, then you will be liable to pay interest to the MSME, and that interest will not be deducted as expenditure under the Income Tax Act. That has been amendment has been done by that act, not by this act. Okay, and that is to be we have to give information by scrutinizing the interest. Go and see that any interest paid by way of that act. If that act is applicable and that interest is paid, that will not be deducted as expenditure. This is one of the old clause that is particulars of payment specified in section 48(2)(b). 48(2)(b) is payment made to, like company is related party. It's in here, it's not related party, it's relative. Payment made to specified persons. Normally the relative has been in the case of individual relative of the SSC. In the case of partnership, relatives are the partners. In the case of company, relatives of directors is to be mentioned. Definition of relative is already there. According to that, either your brother, sister, lineal ascendant, descendant, or your father, mother, if you are paying anything to them, that you have to particulars has to be mentioned. That is very simple clause is there. Then amount deemed to be profits and gains, that 32AC, 32AB, they need not to be directly discussed because not much relevant. This is one of the important provisions, amount of profit chargeable to tax under section 41 and competition thereof. Okay, any allowance or deduction has been made, assessment in respect of any earlier years, which has been recovered. Okay, that is to be treated as the income of yours, and that is to be reported on this clause. This is one of the most important clause in this receipt, which everyone should be aware of this clause, because this clause 44AB report cannot be completed without this clause. Okay, any surplus refers in clause so and so of 43B means whatever the tax payments or GST payment or whatever the payments which are applicable to be paid, deduction is allowable only on the payment basis if it is not paid in the during the year. That amounts you have to find out. See that whether it is been paid on or before due date of the return on section 139(1). What happens? No, sometimes what happens now? You're auditing in the month of June, July. Okay, that amount is not yet paid. For example, in the case of some GST is there. Okay, earlier VAT was there, now GST. Now GST actually you cannot keep hold it because your returns itself cannot be filed. So you have to pay it first. But for the sake of understanding, we'll take it that suppose 5 lakhs rupees GST is payable as on 31st March 2022, and you are not paid within that up to the date of filing of the completion of the audit report. Suppose in the month of June, July, you are auditing this. In that case, you have to report here that it is not yet paid. Okay. However, what happens now? Clients get after you in the month of June, July, but he will file his return in the month of October. He has a due date of filing of the return is the month of October. Filing of a tax audit report is by 31st September, and return is by 31st of October. Suppose he kept on hold and he has not submitted his return of income, and in the month of September or in the month of October he has filed it, that 5 lakhs rupees. In that case, you can file a revised audit report. Only for that purpose, the revised audit report concept has been introduced by the CPC, and only for that purpose only you can revise your audit report. Here you have to report what incurred means last year previous, for example last previous year में पेबल है, इस साल में भरा है तो कब भरा है, इस साल का पेबल है वो भरा या नहीं भरा है, if नहीं भरा है before due date of filing of return or before completion of the audit report, you have to mention all this clause. This is very important. You have to take the GST paid or whatever tax paid receipts in your hand, then only you can do it. Sometimes happens in the case of bonus. Okay, sometimes bonus provision has been made in the month of 31st of March, but bonus is paid by Diwali itself, and when Diwali comes, then only the people pay this. In that case, sometimes if it is before September or after September. If Diwali is after September, normally it gets disallowed and it is paid in the next year. Sometimes it happens. It depends on client to client. this clause, this clause, it says that central value and taxes credit availed and utilized during the year. It says this clause is actually should have been amended, but after the GST period, but unfortunately they have changed the clause of 44. They changed clause 30C, but they unfortunately not touched to this clause. But as per guidance note, they had given that what is Senvat is not there, but still you have to give GST ITC details in this format. What they are discussing over here, whatever the amount of ITC you have utilized, and CPC already amended utility. Suppose you go into utility, you'll find that ITC there, but it is not in the form. Then expenditure of prior period debited or credited to profit account. See, the wording here is particulars of income expenditure with prior period debited, credited and debited profit loss account. Any expenditure related to earlier years, if you find doing the scrutiny of the profit loss account, you find this expenditure not belongs to the year under which you are doing the audit. Okay, if you're not belonging to that audit, in that case, that is to be reported here. Similarly, some certain income which is not belonging to the current year and which is corresponding to earlier years, that is to be also reported here. This is the way table suggested by the ICI, where Senvat you replace here with ITC. Suppose this clause 28, whether during the previous year RCC has received any property being share of company, not being company in which public are substantially interested without consideration or inadequate consideration, as referred in 56.2.8.7a. If yes, you have to give the details. Suppose RCC has received any property without any consideration. In that case, you'll have to give these details. Normally, rarely this type of question arises. Second, 29, whether during the previous year RCC received any consideration for issue of shares which exceed the payment. For example, suppose if your FMV of that company is rupees 500 rupees, okay, and you have received that with 100 rupees only, that 400 rupees will be treated as your income. And suppose you have received any shares which is below the fair value, then that will be treated as your income. There are certain income where gifts, normally gifts which have been received without any consideration, that is to be reported here. Provided exclusion is there, if it is received from relative, it is not to be reported. The amount of income chargeable to tax under in the source has been 5610, which is already covered earlier. It is to be reported here again. Details amount on borrowed hundi, any amount due, this is old provision, still it is there. I think most of the cases it is not applicable. This clause is relating to transfer pricing and 92C and all that. That is not, we'll not discuss much here. Because that and 30C, that both clauses which are applicable this year where limit of 3 crore and above adjustment, if you find it, then only that is those clauses are applicable. So this 30, 30A, B and C, this 30C also, that is provision related to GAR. Okay. This 30C, this impossible avoidance agreement more than 3 crores, which is not applicable in our case. This 30C is to be reported from this year only. This is one of the major affected clause, 269 SS. Suppose assessee is short of money and he want that money for the purpose of his business right now. He wants to pay credit or he want to buy something. Okay. So what he does, he asks for the bank. Bank said, okay, I'll take 10 days, 14 days, 1 month to pass the loan. So what he approached to his friends and relatives, अरे भैया एक 5 लाख चाहिए 2 लाख चाहिए मुझे देना तो बोलता ठीक है ले ले. What happened in the earlier days, people were taking this advantage. They are depositing cash to the bank and they are always having short of cash in the cash book. What they are doing, they are showing कि इससे पैसे फलाना एडवांस लिया, इससे पैसे फलाना एडवांस लिया और वो कैश में एडवांस दिखा के वो नील करते थे. Then this section was introduced long back, last 30 years, where you cannot accept money in excess of rupees 20,000 in cash. This is a provision. The limit earlier was 2,500, then it rose to 10,000, now it is 20,000. One of the key aspects of this is you cannot borrow in cash in excess of 10,000 in aggregate. Suppose you are borrowing 5,000 right now, 10,000 right now, then 15,000 right now, then you cannot borrow 6,000 again in cash. Once you exceed 20,000, you'll have to borrow by check only. Either check, demand draft, or nowadays by way of notification, they have given certain way of banking transactions where you can take that money. Similarly, you cannot repay it also. Once, suppose 10,000 you borrowed right now, okay, and paid it to him back, no issues. You borrowed 10,000, then you borrow 15,000, not permissible. Then you can borrow 19,000. After 20,000, you have to borrow by demand draft or check or net banking only. At the time of repayment, also you have to pay by check only. If you violate this, there is a penalty under section 271E for 100 rupees default, 100 rupees penalty is there. 10,000 default, 10,000 penalty is there. 1 lakh default, 1 lakh penalty is there. So you have to report here. They had given some name, address, किससे पैसा लिया, whether वो accounts clear हुआ नहीं हुआ, maximum outstanding कितना था. All these are the general information they have prescribed that we have to give. Then there is one more provision, 269 ST. 269 ST where states if you are taking any money for the purpose of sealing up fixed assets, capital asset, advance received for capital asset, that is also not to be taken for in cash. That is 269 ST. And while scrutinizing, I will come back to SS again regarding deposits, where there is sometimes there is common account is maintained. Okay, common account is maintained that वो भतीजा है, वो भताजी को काम पे भी करता है, उससे पैसा भी लेता है, उसको सैलरी भी देता है, सब कुछ करता है. So you have to bifurcate that salary account differently, his current account differently, and loan account differently. And in that case, loan account he cannot pay take in cash. Salary or other expenses, whatever it may be, he can do it in cash, provided limit of 48 has been applied. Then advance specified firm, right now I was discussing about ST regarding transfer of immovable property, whether or not takes a transfer. For example, X has approached you for buying up your property. And he said, this is 1 lakh cash, I'm giving you advance. Okay. And after 5 days, 10 days, we'll discuss the other terms. and we'll finalize it. But unfortunately, he's not came back, and he said, no, I don't want to give property because your legal titles are not here. Now, problem is that even you transfer took place or not, you should not have accepted that money in cash in excess of 20,000. And you cannot repeat also in cash right now, again, once you accept it, because both the times penalty will be applied, either acceptance also and repayment also. What happens now, when we talk about otherwise than cross check and demand draft, is the wording is there in the act, it is very difficult for us to verify whether account pay check or not. So normally this type of note has been already drafted earlier also, ICI. What we are commonly, your offices must be using this note. Just take a note of it, that it has to be mentioned whenever, either in 43 or 269 SST or any other where cash, you have to certify that cash payment, otherwise that cost check and demand draft. It is not possible for us to verify whether loans and deposits are taken, accepted, otherwise than account pay check or bank draft, and necessary evidence is not positioned with the SEC. However, nowadays this has very limited scope because most of the cases net banking transaction is happening. So this clause may not be relevant many times nowadays. Earlier this was required. This ST I have already discussed, where specified sum of money is not to be taken. One more thing I had to one more thing I had to discuss to ST. Sorry, I forgot about ST. I was discussing about SS. ST is relating to amount exceeding limit of ST in aggregate of percent respect of single transaction per single event on occasion or during the previous year where such receipt of money or check draft was used for the electronic method. For example, I am having a banquet hall. I am giving on the rent. Okay. Miss X has been approached me for his engagement ceremony, and that engagement was on 10th of July, and she has given me 50,000 rupees in cash, and I was okay with that. She was not having particular issue, so that issue was over. Again, she booked a hall, and that was in the month of October, and that amount was billing was around 1,20,000. Sorry, that is billing was 2,50,000. Then she said, I will pay you 1,70,000 in cash and balance by demand draft or net banking transfer. This will not be allowed because 50,000 you are already paid in cash. Then 170 you'll pay in cash. Argument of some persons are there that 2 lakhs in a day is limit is there, but you don't forget that it is for one event or occasion for a person during the previous year. So marriage is an event where you cannot take 2 lakhs in cash from that person, even on a different age. However, section says aggregate from person in a day for a single transaction. For example, I am a seller. I am selling goods. Somebody approached me. He is an agriculturist. He said, no, I have a cash. I want to give you cash only. However, I cannot accept more than 2 lakhs in a day. Suppose my bill amount is 1,80,000, 1,85,000. I can take cash from him. However, suppose my billing is 3 lakhs rupees, then I cannot accept more than 2 lakhs for the whole bill. For example, suppose I accept today 1,80,000 in cash, then I can accept only 20,000 afterwards, not beyond that. Other money has to be received by a banking channel only. This is one of the important provisions under 269T, and auditor, especially, this is to be verified by the articles meticulously, go to the ledger account, see how the credit has been taken, see the debit sales. If it exceeds invoice exceed 2 lakhs, whether that amount has been received in cash or by banking channel. If it is received in cash, there are two conditions to be taken. One condition, it should not exceed 2 lakh rupees in a day. Second, that whole bill should not be more than cash in 2 lakhs, because it is restricted to per transactions. If bills are on same day, that may create, as per my view, problem. Some of the schools of thought say that if bills are different, it may not create problem, but for my view is, even the bills on the same day, two bills, 1,80,000, 1,84,000 in a day, it will create problem for you. This is one of the, see, this is, I will discuss this one again. 269ST provides no person shall receive sum of 2 lakhs or more in aggregate from person in a day, in respect of single transaction, or respect of transaction related to one event or occasion from a person. Otherwise than account pay check or account pay demand draft or use of electronic clearing system. Otherwise, you will be have to penalty under section 271D(a). And basic purpose of the tax audit is like this type of 43, 44, 40 AIA, 269 SST, and 269 ST. All these are the provisions, are the basic crux of this particular EB audit. Department like to trust more attention on this, because we should not make any mistakes in this. This will indulge into problems to your principal. However, there are some exceptions to banking companies and all that. To this clause, I will not be applicable. For example, some business correspondent and all that, this section is not applicable for this. There are two types of reporting is there. One reporting is there where assessee has received from a person. Okay, in 31BA(BB) requires particulars to be furnished in respect of transaction exceeding 2 lakhs, where assessee means to whom your books of accounts are audited, has received from any amount from person, whereas clause 31BC and BD requires where payment has been made. Means if both the books of either on seller or buyer, in both the books, this entry, if it is there, it will reflect. And single transaction related to single event or occasion, tax auditor has to link all receipts and payments. Regarding that, a single invoice may relate to multiple transactions, vis-a-vis multiple bills may relate to single transaction. This is what the guidance note says. Okay. One more reference, NBFC is there. This we already discussed. This note you need to add, very important, similar to earlier. It is not possible to us to verify whether receipt of payment has been made accepted or otherwise than account pay check or account pay demand draft, as necessary evidence is not possible. This is only case of account pay only. Net banking, you always trail for that. Clause 32A to D. details of brought forward losses and depreciation allowances. You'll have to refer to earlier computation of income of the SSC, go and find out on the CPC whether that loss is there, return is filed in time or not. And accordingly, you are allowed to report what are the losses which are carried forward by the SSC during the earlier years, whether that has been return has been filed within time. If return is not filed within time, the cash loss will not be allowed. However, depreciation lot will be allowed. Okay. Then one of the change in shareholding under section 79, where for your information, section 79 gives you changing shareholding. Changing shareholding for the, in the closely held companies, especially private held companies. Suppose ABC Limited has private limited has a loss of ₹5 crores as on the date of 31st March 2022, as 2021, as on 31st March 2021, and right now you are doing the audit where in 2022, if shareholding is changed to the extent of more than 51%, that loss will not get carried forward. That is, the old provision is there in the law. Suppose that 51% shareholding has been changed, in that case you will report, and that loss will not get carried forward. Then any speculation business that you have to report on that. Let me see time. It's 15 minutes. Regarding speculation loss, we have to report on that, whether that is to be carried forward. Then section-wise details of deduction, if any, admissible under chapter 6A. Suppose SSC having unit in specified area, then ATIA or IB deduction if it is available, then ATD, ATC in the case of individuals, or any other deductions which are there, ATU deductions are there available, you have to report. It's a simple clause. If you are filing income tax return, you already know about it. This is one of the most trusted area where SSC is required to deduct tax and collect at provision so and so. If yes, this clause is most important. Try to be attentive on this. In the case where you have been required to follow the TDS provisions, and you have followed also, in that case, you have to fill this table, which is more complicated, little bit complicated. See, this is not issue TAN number section, nature of payment. Nature of payment, you have to mention professional fees, contractor payment, and other salary payment, where total amount of payment or receipt of nature specified in column 3 is to be given. Suppose in this column, column 4, you have to give total amount of this type of payment. Suppose professional fee is there. You did not have to mention only for which studies is applicable. You have to mention all types of professional fees here. Okay. Suppose your professional fees P&L debit is ₹2 lakhs. Okay, then you will have to mention 2 lakhs here. Then amount of which tax is required to be deducted or collected. Okay, when 2 lakhs is professional fees, out of which how much amount which is qualified for the purpose of TDS, there will be some none. There are one GST auditor hai, koi tax auditor hai, koi return filer wala hai, koi IS auditor wala hai, in the professional fees, koi advocate hai. Okay, you know 30,000 is a limit. Suppose each and every limit doesn't exceed 30,000, there is nothing is to be mentioned here. In that case, not applicable also. But only the audit fee is around 1 lakh rupees. That advocate is 2 lakh rupees, and others payments are no smaller payment, which is not applicable. That is to be reported here. Then, which is qualified for the purpose of TDS. Then total amount on which tax was deducted and collected at specified rate out of it. Means on which amount, suppose sometimes no, I have been qualified for the purpose of professional fee 1 lakh rupees, but I have only deducted 80,000, 20,000 I have not deducted. So 80,000 will come here. Amount on which tax deducted and collected. Amount जिस पर आपने tax deduct किया, that will come here. Total amount on which tax deducted and collected was at the less than specified rate. That is to be reported here. Amount of tax deducted and amount of tax deposited, that is to be, you'll have to report all these columns, and that has to be tallied with your profit and loss account. You'll have to make working sheet there, and working sheet, write down how much amounts are qualified, how much amount which is qualified for TDS, what rate you are collected, on with how much amount you are collected, and date on which you are paid. Then whether you have been furnished that quarterly statement of TDS deductions, that report has to be given. In the case you are paid late, how much interest is to be paid, that is to be mentioned here, and which whether you have paid that interest, you'll have to mention here also. This is one of the important clause where in the case of trading as well as manufacturing person, maintenance of quantitative details are always most important. You have to give the opening stock, purchases, sales, closing stock, and shortage if any. Similarly, in manufacturing cases, you have to give the consumption and percentage and yield has been how much product has been received. Okay, that you have to calculate and give it to the in the form 3CD. Sometimes no, it is not possible for you to have each and every item stock is there, but at least you have to give principal items on which stock details which are applicable available with you. Another case you may, if it is possible to maintain, you maintain it. In the case it is not possible for you to maintain, then you'll have to qualify accordingly. But this qualification will have very wide effect. Quantity details has to be maintained by the SEC. Especially in trading cases, it is difficult, but manufacturing cases it is possible. This clause 36A, any SSC has received any amount in the nature of dividend under 222E. Most of the students may not be aware of this clause. I will discuss about this section 222E. In the case of private limited companies, closely held companies, if company has paid to any shareholder or director having more than 10% holding in the company, either loan or advance for any reason, for a single point of time, this will be treated as a deemed dividend to the extent of distributed profits, and that will be taxable in the hands of SEC. This is very important clause. Fortunately, it is not in the hands of companies, so we are not certifying that, but very dangerous and draconian clause. You'll have to go while doing the audit of private limited companies, you'll have to see each and every minute transaction where sometimes no, उसका एडवांस टैक्स भर दिया सर मैंने, वो डायरेक्टर के पास ऑनलाइन अकाउंट नहीं था, मैंने उसका एडवांस टैक्स भर दिया, दूसरे दिन वापस ले लिया, तीसरे दिन वापस ले लिया, 4 दिन वो नहीं था, वो घूमने गया था, फिर मैंने ऑफिस में से भर दिया डायरेक्टर का, तो उसको डेबिट कर दिया, तो हो गया ना भैया, एक बार डेबिट किया, पैसा दिया तो क्या हो गया? It is paid advances. Even it is received back, it will be treated as a dividend. Then cost audit, if it is applicable, you have to give details on cost audit. Whether any audit was conducted as central excise, I think this is redundant now. Only some cases it is applicable. Whether audit was 72 Finance Act, no value. This is not available. Then some mathematical formulas, turnover, gross receipts, turnover, consumption, is to be given. This you have to say whether only details are demand raised, a refund issued during the previous year under any tax laws other than Income Tax Act. This is very dangerous. Only we can say based on the information explained given to us and whether SSC has provided to us. This is one of the important clause nowadays. This type of statements, SSC normally forgot to file. SSC को पता ही नहीं मेरे को applicable है. For example, in the case of company, SFT transactions are applicable when you issue dividend, irrespective of any amount. When a company is paying a dividend, they are to file SFT return before 15th of May, after the financial years ends. Most of the private limited companies where they are failing to these transactions, filing this specified financial statements, SFT returns. This is 286. It's regarding international taxation. This is most important clause 44, for which everybody is waiting for. Okay, this clause was inserted 2 years back, but was not effective up to 31st March 2022. Now, some people initially opined that it will not applicable for the period ended, but it has been clarified that audit reports which are signed on or before 31st of March, clause is not applicable. Any audit report signed after 31st of March, this will be applicable. Problem is that we have not educated our client to give information like that. And now client को दे दिया तो बोलता है सर वो तुम ही देखो तुमको मुझे थोड़ी पता है वो क्या है क्या नहीं है. This clause has no taxability effect. That is just MIS for the purpose of department or government, what it may be, and they have formulated this table where total amount of expenditure incurred during the year. This total amount of expenditure, as per expenditure, includes revenue as well as capital expenditure. So we'll both you have to report. Secondly, one more thing I have to like to mention that I'm not registered for GST. तो मुझे कोई ईमेल नहीं लगना नहीं है. ऐसा एक दिमाग में किसी का बैठा है. It's not like that. Whether you register for GST, you are not registered for GST, this clause is applicable to all audits. Okay. So we'll have to report on that. Total amount of expenditure incurred during the year. Then breakup is like expenditure in respect of which entity is registered under GST. And expenditure relating to entity is not registered under GST. These are the broad two bifurcations. In broad one bifurcation in registered entities, they wanted relating to goods and services exempt from GST and related to entities falling under composition scheme and relating to entities other than other entities and total payment to registered entities. This is what the table they have mentioned. What guidance note says, guidance note has given much more clarity on this. Only total expenditure is to be mentioned. There is no need to give any head-wise expenditure there. So you can give total expenditure. But how you will arrive it? You have to do some working in Excel. You have to do some mathematical formula. You have to export all this from the tally, if you are mentioning or any software what you are using, then you'll have to summarize it, keep record for your purposes. Because if tomorrow department asks you how you arrived it, you must be able to position that how you arrived there. So if you're giving single information, a single figure, working has to be there. Then ICI has already clarified depreciation in 32, deduction from bad debts 36.7, which are not an expenditure and should not be reported in this clause in column 3 to 7. This is what they have already clarified. One more clarification is given by them by the guidance note, and that's why I'm going through guidance note and not from this repeat PPT. Schedule 3, items which are not covered by GST need not to be reported under this clause 3 to 7. For example, salaries to employers. Okay, that is not covered under GST. That is employer-employee relationship. There is no supply of services as per Schedule 3. So it is not to be any items which is Schedule 3 should not be covered. And registration otherwise PE, the GST has no relevance of considering allowability of expenditure. So there is no question of any allowability of expenditure, no allowability of expenditure. So that is to be mentioned. That is to be given for you. By and you have to refer that notification for interest, say and all that. I hope I had covered everything to the extent to my knowledge. If you have any queries, let us will take within 5 minutes. Over to the organizers. Amanji? Rishikesh?
Atul sir.
Haji, Haji.
So, please explain the disclaimer point also, if we can
Which
do
one?
that. Sir, for clause 44.
Yeah, I already discussed. What will you wanted again? Let me show. Again, I should explain.
Sir, any disclaimer that we can
Okay. Yeah. Sorry. I forgot to mention that. Thank you. Thank you for reminding me that. Yeah. See, as I had discussed at the beginning of this session, that who has to comply all 360 details? Auditee has to comply. Okay. But auditee is not able in a position. Okay. So we can give a suitable comment that details of breakup is not available with the SSC or not maintained by the SSC. And I will suggest you to, at least for this year, okay, at least for this year, we should not, instead of giving details, you should not say that it is nothing is available. Okay, we should at least give expenditure total payment to the registered entities and non-registered entities. Okay, that we can also do it. We are not able to position to see whether it is composition dealer or not dealer. So in that case, we can suitably comment in Form 3CB itself. Okay, necessary evidence is not positioned with the SSC, and we have compiled the data based on the SSC declaration, and SSC, based on SSC has supplied it. That comment or that declaration, we should furnish it. ICI has not given any such format like 43, but we are in our office, we have developed one note on that, where we say is that necessary information not in position with the SSC, and SSC is not in position to give the breakup of expenditures, and we are giving these 2 columns only, total column and expenditure relating GST and non-relating GST. That only we are giving. Any further?
Hello, sir. Can you please explain wherein it has been defined how to calculate turnover of derivatives?
It is there now. We have discussed that it is already in the guidance note where derivative turnover has to be taken in positive favorable transaction and negative favorable transaction in absolute terms. What is absolute terms? Suppose there is a 10,000 is your profit, okay, and 3,000 your loss. Your turnover would be 13,000, not at 7,000.
Okay, sir. Thank you.
Okay. And from this year onwards, guidance note says any premium received will not be form part of turnover. Earlier, an earlier guidance note that any premium received will be also again taken to form of turnover. So now that relief has been given and lots of people are getting much relief. Any more query? I think people have understood or nothing understood.
I think understood.
Should we close this session?
Sir, is it done?
Sorry?
Aman?
Atul? Hello?
I think, sir, we should open the floor for the questions. If anybody have a question, they can ask a question. Aman?
Yes, sir.
I think floor is open for the questions. If any questions are there, we can ask the question.
Yes.
Standing on Rishikesh, sir. Any questions? I think the session was wonderful. That's why nobody should have a question about this. Detailed explanation.
Yes, sir. Atul sir has gave the detailed explanation about Form 3 CD and everything, which is really important. And every aspect has been covered nicely by sir. So I think all the doubts which students might have in their minds they could have been resolved, and they has resolved, I think, with the sir. What sir has said. Yes, it is also available on YouTube. Reman sir, it is available on YouTube now. We are live now.
Yes, it's available. Can you proceed to the closing ceremony?
Sure. So thank you so much, Atul sir, for giving this wonderful deliberation. And indeed, it's very imperative for students to understand in detail the amendments that has been made in guidance note. And it's very good to that you deliberated so well. And now I would hand over the dais to Khushi Bajaj for a vote of thanks.
Thank you, Aman. So that was definitely an amazing session. Tax is definitely a topic that at times becomes heavy for students, but thanks to our speaker of the webinar, C. Atul Doshi sir, who made sure that he could best deliver his knowledge and information. So thank you so much, sir, for taking out your valuable time and putting in your efforts for this presentation. That was definitely an insightful deliberation. The knowledge that you have shared, we hope the students will it will help them in their tax audits. So I extend my generous thanks to you, sir, on behalf of Sikasa Committee Jodhpur. Okay, I would also like to thank Sikasa Jabalpur, Sikasa Mathura, Sikasa Agra, Sikasa Nanded, and Vikasa Satara for coordinating with us and making this webinar a success. Thank you to Chairman Dhaval Kothari sir and Sikasa Chairman Hemant Lohia sir for organizing this webinar. I would also thank all the participants and students who joined us in this webinar. And thank you to all the coordinators and volunteers who joined hands to ensure the proper conduct of the webinar. So at the end, I would all say thank you. It was wonderful being with you all, and it was a great session. Thank you. Over to you.